I would like to share with you a very important lesson I have learned through the Falcon mechanics. Okay, so this is part 5, guys. Part 5, our entry mechanics. Okay, is our entry mechanics, and yeah, we have this technique, guys, that we use called the PSE, guys. The PSE meaning position sequence entry model. Look at it. So first thing, guys, what we do as Falcon traders when we open the markets, okay, we first identify our highs, guys, our hook points, and also our inflection points. Okay, so right here, guys, I would like to make an example. Okay, so let's say right here, guys, we have our volume area. Okay, our volume area, and price is somewhere right here. Okay, let's say it's in a bearish trend. Now let's say it's in a bullish trend, right? Price in a bullish trend, it maybe form this correction and then go down. Okay, after that it form a correction, guys, but that correction is not on the hook point or a inflection point, guys. So right here, guys, you can see that no, we are not positioned well. Okay, right here we are not positioned well, so we're going to let this correction slide, guys. We ain't going to enter because it might be risky, it carries higher risk. Okay, so right here, guys, on your right hand side, you can see that are we positioned well? Yes, we are positioned well. Why? Because price is in a hook point or a inflection point. Okay, so obviously we're going to wait for us, guys. We're going to wait for price to make our first impulsive push. Got it? We're going to wait for price to make our impulsive push, our first impulsive push. Okay, and then our structure will be on the 5 minutes or the 15 minutes. We know why? Because we are trading in the blue zone. So I will explain that, guys. I will explain that technique later on. Okay, so right now let's go to our sequence, guys. Let's go to our sequence. So let's say, guys, price is in our inflection point or our hook point. Okay, and then it did what? It make our first impulsive push and then form a bigger correction after our first impulsive push. So right here, guys, we ain't going to enter because this carries more risk. Okay, this carries more risk. So most of the time price, so most of the time, guys, price might do some v-shape, guys. Okay, maybe somewhere right here. Okay, maybe after closing below our hook point. Okay, and then form some v-shape, guys, form some v-shape, and then go down, guys, go down, forming the first correction, continuing the direction. All right, there, right here, guys, we ain't going to enter. We're going to wait for price to form our second correction, guys, our smaller correction. You got it? Our smaller correction, guys, after impulsing. Okay, so this is what we call, guys, the insurance entry. This is what we call the insurance entry. So right here, we're going to enter when price close below our takeout level. Okay, when price close the 1 hour candlestick below our takeout level. Okay, so guys, take the sequence as your ascending order. You got it? So what we like to see, guys, we like to see our ascending order. Okay, so let's say price is on a hook point or an inflection point. Okay, and then form, and then it did what? Make our first impulsive push, guys. Make our first impulsive push, guys, our first signal, and then obviously Falcon traders are going to wait for price to form our first structure on the 15-minute time frame or the 5-minute time frame. Okay, our first structure must be on the 15-minute time frame or the 5-minute time frame. Okay, and then obviously we're going to enter, and then our targets will be the 90% rule, guys, and then yeah, our second entry, guys, we're going to wait for price to form a bigger structure on the 1 hour time frame or the 4-hour time frame. You got it? The structure must be visible on the 1 hour time frame and also the 4-hour time frame. So obviously, guys, we're going to wait for price to form our 1 2 3 structure, guys. Our 1 2 3 structure. So let's say right there is our first touch, then our second touch maybe right here, and then our second touch must be right here, guys. Yeah, our third touch must be right there. Okay, so obviously, guys, you know why price forming a bigger structure, guys, because price is already in the blue zone. Okay, price is already in the blue zone, meaning on the blue zone, guys, we only trade the bigger structures, not the smaller structure. On the blue zone, we only trade the bigger structure, and then on the green zone, guys, we trade those smaller structures, those structures on the 15-minute time frame and also the 5-minute time frame. Okay, and then on the red zone, guys, on the red zone, mostly we trade a structure within a structure. You know why? Because most of the time, guys, you can see that price already reached our 90% rule. Okay, you got it? price already reached our 90% rule. So right here guys, we're going to enter when price form a structure and then a structure within that structure, you got it. So yeah guys, this is how you trade guys, this is how you trade like a falcon, this is how you trade like a falcon. Obviously right here guys, we're going to wait for price to form a structure within a structure, you got it. It might be a continuation pattern or a expanding channel, you got it, as long as it's a structure, you got it. So let's go to, so yeah guys, right now let's go. I want to show you how to identify a impulse, okay, how I identify the impulse. So yeah, let's go to it. So guys, yeah, so guys, yeah, let's say you let's say, so yeah guys, let's say maybe price is on your inflection point or your hook point, okay, and then after that guys, it make this first impulsive push guys, and that impulsive push is only one candlestick, okay, and then form maybe your correction guys on the 5 minute time frame, that smaller correction. So guys, this one ain't safe, you got it, he ain't safe according to my experience, okay. So what I like to see guys, I like to see price impulsing using 3 or 2 candlestick, okay, 3 or 2 big candlestick, okay. So what I say guys, I know if price impulse like this, I know okay, right now the momentum is surely starting, okay, the momentum is starting to kick in the market. So and then obviously guys, I'm going to wait for price to form that smaller structure on the 15 minute time frame or the 5 minute time frame guys, that 1 2 3 structure, that 1 2 3 structure guys, that 1 2 3 structure, and then price losing the 1 hour candlestick below my takeout, okay, and then obviously we're going to enter, and then the target will be the 90% rule, okay. So this is how I like to trade guys, this is how I like to trade using the Falcon FX trading strategy, okay. And then guys, we have the PTS trading strategy, the publicator FX trading strategy guys, the strategy I use to trade on my personal account, you got it. So it's where I use the strategy for scalping guys, for scalping daily, okay. So on the strategy guys, we have those 2 continuation patterns guys, and we call these two the 2:1 technique, okay. So the 2:1 guys, what I mean, let's say guys, price is in a bullish trend, okay, it's go up, okay, and then it came down and then it failed to break this higher right here guys. We know that okay, this correction is starting because we failed to break this higher right here. So obviously right here is our first touch guys, and then our second touch is this level right, okay, and then obviously we take a copy guys, we make a copy of this trend line, and then we accommodate it in this middle level we have right here guys, in this middle level we have right here. So this is the 2:1 technique guys, the 2:1 technique on the bullish trend, okay. It's a continuation pattern, okay, and then on the left hand side guys, we have our continuation pattern guys, our and then down, and then guys, first thing what we do, okay, let me just remove these trend lines. Okay guys, let's say price is in a bullish trend, right, price is trading in a bullish trend. So right here guys, you can see that we impulsed and then price went up and then it came down guys, but it failed to break this lower we have right here, okay. We know that okay, the correction is starting, right, okay, and then we mark these 2 lower levels right here. So right here guys, is our first touch, second touch will be this level right here, okay, and then guys, we take a copy, then accommodate it in this upper trend line we have right here, okay, and then right here guys will be our first touch on the upper trend line, second touch on the upper trend line, and then our third touch. So remember guys, we enter on our third touch, okay, and then obviously I like to use what we call a takeout level guys, a level within a structure. So this higher right here is my takeout level. Same thing guys, on a bearish trend I use my takeout level, I wait for price to close above that takeout level, okay. So there's this entry guys I'm holding right now, it's silver, and I'm holding it with the team guys. So this is what I was talking about, okay, in the bullish trend, in the bearish trend, okay. You can see that first we have our impulse and then we have our correction. Obviously after the correction we are expecting a impulse, okay. So same thing guys, you can see that we impulsed and then we came down and then price failed to break this higher right here, failed to break this higher, and then we came down again guys. So obviously what we do guys, we take out our trend line, we take out our trend line, guys, and then we first mark these two upper levels right here. My first touch is this level, and then the second touch. Okay, so this is what we call the 2:1 technique, guys, the 2:1 technique. And then we wait for a third touch. Now remember, we wait for a third touch. So right here is my first touch, second touch is this level, and then third touch is this level, guys. Okay, and then obviously I identify my takeout level. Okay, my takeout level is this level we have right here, a lower within a structure, guys. You got it. And then obviously after that one, our candlestick closing below above our takeout, obviously then I'm going to take my entries, guys. And then guys, for our targets, we measure the impulse, guys. We measure the impulse, and then take the trend line to the dead touch. We got it, to the dead touch. You can see that this dead touch right here, guys, we have right here. So this is how we measure our targets. Okay, so as you can see, guys, it fits correctly, it fits accurate, guys, with my take profit level, guys. So yeah, guys, I'm still holding with the team, obviously, guys. I discussed this pair with the team, guys, today, so you better make sure you join the VIP, guys. Let's go to my WhatsApp. And yeah, so guys, yeah, I'm on the VIP mentorship right now, guys. I'm on the VIP mentorship. So this was the analysis, guys. This was the analysis on the 15-minute time frame. On the 15-minute time frame, you can see that we have our impulsive push, and then obviously price failed to break this higher right here, and then formed our correction. So this was my structure, guys, as you can see. And then obviously I entered when price up closed above the takeout level. As you can see, this one, our candlestick closing up, this 15 minutes candlestick actually closing above my takeout level. Okay, so let me check. And then guys, this was the analysis on the 4-hour time frame. Okay, we can see that, okay, price was impulsing, and then it formed this correction, and then after that it impulsed, okay, and then it formed this correction towards a hook point. It formed a correction towards a hook point, meaning it might reverse. Okay, and as you can see, I identified my reversal pattern. Okay, and then after that, that touch, price closed above the takeouts, the hook point. Okay, and then it impulse formed the first correction, guys, formed the first correction, and then obviously we expected a impulse, and as you can see, guys, the market is moving, guys, cruising nicely with the VIP. So yeah, you better make sure you join the VIP mentorship for now. So guys, in Falcon, I only like to use two entry types. Okay, on the left hand side we have our insurance entry, where we enter after our first impulse, okay, and then on the right hand side, guys, we got our 50% retracement, where we enter price when closing below our 50% retracement. Okay, so right now let's get to our insurance entry, guys. So right here, guys, let's say we have our hook point right here, guys. Okay, and let's say maybe price created some value right here, some volume. Let's say price created some volume. Okay, so obviously we're going to what, guys? We're going to identify our hook point. Okay, and then we wait for price to reject, guys, this level. We wait for price to reject this level. Okay, obviously price is going to do what, guys? It's going to give us our first impulse, our first impulsive push, guys, going down. Okay, and then, guys, obviously going to wait for what, our correction, guys, and that correction is going to form on the 15-minute time frame or the 5-minute time frame. Okay, we want to enter on our first correction. So right here, guys, we're going to use what, we're going to mark the two lowest levels, guys. Okay, let me remove this takeout, and then, guys, obviously, okay, we're going to use our 2:1 technique, guys. Our 2:1 technique, we make a copy, we accommodate it in this upper level we have right here. Okay, so obviously right here, guys, will be our first touch, second touch will be right here, and then, guys, we enter on our third touch. When price close below our takeouts, guys, when price close the 1-hour candlestick below our takeout. So yeah, right there, guys, that's our entry. We enter with our sell positions, and then our, okay, we enter right here, guys, when price close below our our takeouts, guys, when price looks below our takeouts. And then our targets will be our 90% rule, guys, our 90% rule, using the retracement, guys. Using the retracement tool, we mark the higher to the lowest level, guys, to the lowest level we have, to our lowest level we have right here, guys. Okay, and then guys, obviously our targets will be what? Our 90% rule, guys, our 90% rule. We're going to target our 90% rule. Okay, so let's go to our 50% retracement entry, guys. Let's go to our 50% retracement entry. You got it? So let's say, guys, obviously we have what? We have our hook point right here. Okay, and then price approached that hook point and then breaks the hook point, guys, sweeping those stop loss levels, guys, taking us those early entries. You got it? And then obviously it's going to close what? We wait for price to close the bearish candlestick, retracing 50% of the bullish candlestick. You got it? So obviously we're going to take out our tool, guys. We're going to take out our tool, mark the week, guys, mark the week to the last week. You got it? To the lowest week, guys, to the lowest week right here. Okay, we wait for price to close the bearish candlestick below that, retracing that 50% bullish candlestick. You got it? And then obviously our entry will be right here, guys. Our entry will be right here, guys. Okay, obviously our stop loss must be above, guys, must be above. So my candlestick are too big, guys. Do not mind the stop loss level. And then obviously we're going to target our 90% rule. We got it? I'm going to target our 90% rule. So yeah, right now let's go to the charts, guys. Let's go to the charts. So yeah, guys, right now I'm on Euro USD. I'm on the 1 hour time frame. Okay, so right here, guys, you can see that price did what? It formed what? Our V shape, guys. Our V shape, the V shape I was talking about. Okay, and yeah, our first entry, guys, will be right here, guys. When price retraces 50% of the bullish candlestick, we're going to enter when price goes below our 50% retracement, guys. We're going to enter when price goes below our 50% retracement. Okay, let me zoom in, guys. So yeah, guys, right here you can see that price closed below our 50% retracement. You got it? So right here will be our entry, guys. Okay, right here will be our entry. And then, guys, our targets will be the 90% roll, using using the retracement tool, guys, using the retracement tool. So let me do like this. Yeah, okay, let me just mark this hook point. So yeah, guys, our target will be our 90% roll, guys. Our 90% roll. Yeah, 1:5, guys. It's something. Okay, so yeah, right here, guys, it's our first entry. It's our first entry. So let's see. Okay, almost hit our stop loss, then bang, guys, you can see that price impulse, maybe hitting your take profit 1 or your take profit 2. Okay, and yeah, guys, our second entry will be the insurance entry, guys, where we enter on our first correction move. Okay, so yeah, guys, right now we're going to enter on we're using our insurance entry type. Okay, we're going to wait for guys for price to form our first correction on the 15-minute time frame. Okay, so right here I do not want to zoom in because it will restart the whole process. You got it? So obviously we're going to enter when price form our first correction on the 15-minute time frame. Okay, or the 5-minute time frame. You got it? So right here, guys, we are going to use our 2:1 technique, and yeah, guys, right here you can see that we have our first touch. Okay, first touch will be right here. No, this is our second touch, guys. Our first touch will be somewhere right here, guys. So yeah, guys, right there will be our first touch. Okay, second touch is this level right here, is this level we have right here, and then our third touch is this level right here. Okay, and then obviously you're going to identify our takeouts, guys, our higher level within a structure, so this level right here. And then we're going to wait for us, guys, for price to close below our takeouts, guys, for price to close the 1 hour candlestick below our takeouts. So yeah, guys, we're going to enter on price close below our takeout level right here, guys. We're going to enter on price close below our takeout level. Okay, so let me check this. So I guys, the stop loss will be too tight. Okay, so what we're going to do, guys, we're going to measure this week right here, guys, this week for a tighter stop loss. Okay, so my stop loss will be right here, yeah, below the 50% retracement, guys. Okay, then my target, the last lower, guys. Then yeah, our targets will be the last low, guys, but our targets will be the last low. So right here, we are risking one, we are risking, so right here, guys, we are risking 1% for 2.5%. Okay, it's better than nothing, guys, it's better than nothing. Okay, and then yeah, let's see, guys. Okay, price from this correction, yep, and then guys, went down, hitting our take profit, all our take profit levels. Okay, so right here, guys, you worked away with 5%, 5.8, and then right here we walked away with 2.5%, guys. That's closer to 9%. That's closer to 9%. That's closer to 9%. Okay, so here, guys, this is how I trade. This is how I capitalize from the impulse. We got it from the impulse because the main focus for this strategy, guys, is to enter when the impulse starts. Okay, so yeah, this is how we trade like a falcon, guys. This is how we trade like a falcon. So part 2, guys, will be shared shortly, you guys. And yeah, if you do not know part 1, check out this video on your screen. Be sure to hit that subscribe button, be sure to hit that notification bell so that you're going to be notified when I drop part 3. Okay, so for now, it's a Forex Mentor signing out.